This is week 5 of investing every week in the stock market. I started this series to document my journey in the stock market, to increase transparency around investing since there are a lot of scams online, and in the hopes that someone might get motivated and start investing or keep motivated with their investment journey. If you're interested, please smash the like button and the subscribe button so you can also follow along and watch me hopefully make money, and maybe I'll lose money. Who knows? But as long as you get some inspiration, keep consistent or start, that's gonna be good. That is the purpose. I would be very, extremely delighted. This week we have around $1,900 in my non-registered account or my margin account. Plus we have some money in my other accounts because I actually did sell something this week for the first time in a while. So all in all, we have around $2,400 to invest. Let's deal with the leftover money first before we get to the other chunk of money. I ended up selling Intel, ticker symbol INTC. I bought this more as an opportunity since their earnings were down and I thought it is a big company. Chips are the future when it comes to AI and technology in general. And I thought Intel being US based could mean that they get some sort of positive catalyst in the future, but it turns out that at least for the next 3-4 years, their contracts are not going to increase at a rapid pace. And other companies like Nvidia and AMD are overtaking them in the AI race. So I ended up selling everything and I have around $300 here to invest. But what am I buying with it? My buy with this is going to be Datadog. There's 2 reasons for this. Number 1, Datadog is an excellent platform. They essentially monitor and do analytics for your technical infrastructure and your data infrastructure and easily integrate across all cloud platforms. So AWS, Azure, and Google Cloud, the 3 main cloud platforms that are used by any company that wants to use cloud. This can actually be seen in their financials. Their revenue is increasing at a really nice rate in the mid to high 20s. And what makes them so good is that they're very efficient. They actually have a positive profit margin, which is not the case for many other SaaS B2B companies in the same space. And the second reason is that this buy is actually in my TFSA or my tax-free savings account, which means that any gains that I make in this particular account are tax-free forever. I can withdraw this $156 Datadog share. If it's $1,050 10 years from now, I can withdraw all of that money completely tax-free. So my logic is I want to be buying companies and taking a bit of a risk, a calculated risk, so that if it actually does do well, I can get those tax-free gains. So I'm going to go here and buy 1 share of Datadog. Cue the order. Done. Now back to regularly scheduled programming. The first ETF I'm going to buy is an ETF tracking the S&P 500, the 500 biggest companies in the United States of America. I'm using this ETF, VFV. It's a Vanguard product, but you can use any ETF provider you like. This has historically returned 10% on average for the last 40 years now, and I make sure that I spend some money, or I would say a decent chunk of money, actually buying the S&P 500 since I believe in the long-term potential of the S&P 500. So I'm going to queue an order for 3 shares of the S&P 500. Done. My next buy is going to be in the NASDAQ 100. Once again, 100 of the biggest companies in the United States of America, extremely tech-focused since it just so happens that most of the big companies are tech companies. If you don't believe in the potential of technology in the future, you might want to stay away from this. But I think technology is going to do extremely well in the future. Everything I use, from this camera to this mic to this laptop I'm looking at to my phone in my pocket, everything is technology and has a large part to play in any future industry. The first example being AI. So I'm going to go ahead and buy 1 share of the NASDAQ 100. Cue the order. Done. My next buy is going to be in a leveraged S&P 500 ETF. Much like the S&P 500, this tracks the 500 biggest companies in America with the extra added element of leverage. This ETF USSL that I like is 25% leverage. Let's say that the S&P 500 does well and goes up 10%. This ETF is going to go up 12.5%. On the other hand, if it does badly and goes down 10%, this ETF will go down 12.5% plus leverage cost, or the cost of interest that the ETF provider takes out to actually buy the investment. You can see the pros and cons here, but for a long-term investor like myself, this makes sense. This risk might pay off because I want my returns to be magnified if I actually do believe in the S&P 500, which of course I do. So 2 shares of USSL, cue the order. Done. My next buy is going to be in Pepsi. Pepsi is a company that we all know. They make soft drinks, snacks, and other household products as well. Extremely mature company with revenue over $80 billion, a steady profit margin, but it actually has not performed well in the last year, with it being down 3.17%. But this is exactly where I think I should be taking a calculated risk. Do I think Pepsi products are going to be there 20, 30, 40 years from now and be multifold of what they are today, since they do have cash reserves to buy up-and-coming brands that contribute to the beverages and snacks space? Yes, I do. Do I believe that Pepsi has the capacity to expand even more internationally into developing markets with their already robust supply chain? I do. And most importantly, do I believe that the main reason for buying this stock, which is the nice dividend yield now at 3.3%, do I think that they can sustain this given their past record of sustaining it for 50 plus years? Of course, past performance does not imply future results, and this might go down the drain, but I think it's good enough to take a risk for one share of Pepsi. One share. To the order, done. My next buy is going to be the Canadian market through this ETF called VDY. This pretty much tracks the TSX 60, which is the Canadian version of the S&P 500. Banking, telecom, insurance, any big industry that is popular in Canada is included in this ETF. It's done extremely well in the past year, being up 25.61%. And with Canada cutting interest rates, I can only see this going up even more, since industries like telecom that are extremely interest rate sensitive recover some of their lost gains. I'm going to place an order for 4 shares of VDY. To the order, done. My next buy is going to be a leverage all equity ETF. Leverage we've already covered, and similarly to USSL, HEQL is also 25% leverage. But what does all equity mean? It essentially means that it holds not just US and Canadian holdings, it also has international exposure. One thing you might have noticed about my portfolio is that I focus mainly on the US and Canada, since I believe that the US market is going to be extremely good for growth. But I do think it's good to have some international exposure, which is why I choose to invest in HEQL. And of course, because of leverage, those returns are also magnified. So I'm going to place an order for 3 shares. Done. My next buy is going to be in Snowflake. Snowflake is a tech company that operates in the data cloud, like they like to call it. They essentially provide data warehousing software where customers and clients can dive deeper into their data and make some sense of it and derive value from it. It's not done well in the past year. If you look at the returns, it's pretty much flat and it's very volatile. But once again, like with Datadog, I do think Snowflake products are going to be extremely valuable, especially in a more data-driven world with multiple companies slowly realizing that they need to take their data seriously. Revenue is increasing at a very rapid rate. Their customer base includes some of the biggest companies in the Fortune 500, and I think it's good enough to risk 1 share. To the order, done. My next buy is going to be in a leverage S&P 500 ETF that is a covered call ETF. Covered calls are extremely controversial in investment circles online. Some people love them, some people hate them, and they fight a lot and want to be right. But the key thing to note is that they sacrifice long-term growth for income now. As you'll notice, this ETF I like in particular, HYLD, has a yield of 12%. This is astronomical compared to the S&P 500 with a yield of 1%. I don't like investing a lot of money in covered calls since I primarily do want to invest for the long run. I'm not going to deny though that they are a good motivating factor. Seeing income come in every single month keeps me motivated to invest thousands of dollars pretty much throughout the course of the year. And I don't think that would be the case if I invested in only growth, since watching that graph go up and down is pretty sad sometimes. So 8 shares of HYLD or covered call ETF tracking the S&P 500. To the order, done. My next buy is going to be in a covered call ETF tracking the TSX 60. Similarly with HYLD, HDIV tracks the TSX 60 and it also has some exposure to US financials. Investment philosophy is extremely similar, getting that motivation to keep grinding basically. I'm gonna queue an order for maybe 5 shares. 6 shares of HDIV, queue the order, done. With the remaining money, I'm actually gonna go back and buy 1 more share of the S&P 500 since I do think I've spent a lot of money buying a lot of things and I want to refocus a bit and focus on the gold mine, my baby. To the order, done. $131 left. I'm gonna go ahead and buy VDY, 2 more shares. To the order, done. And with the remaining $29.88, I'm gonna go ahead and I'm gonna buy HEQL, 1 more share of HEQL. To the order, and done. $1 left. I think we've accomplished what we needed to do. We do have $91 left in the TFSA, and I'm going to split this between HYLD and HEQL. 1 share of HEQL. Actually, you know what? I might just go for 2 shares. Why not? Live. $34 left. I am going to go ahead and invest this in HYLD. 2 shares. To the order. Done. We do have $18 left in the RRSP, but I'm going to save that for next time, which means that this is it for this week's episode. As always, if you like the transparency, smash the like button and the subscribe button, and I'll see you next week.